Gracious good afternoon to each and every one of you out there in Traderland. My name's Des Woodruff here at Grok Trade. It's Wednesday, March 23rd, 2011, and the market's closed here in bullish territory after a major sell-off. We have the Dow up 0.56%, the S&P up 0.3%, up a 0.5% on the NASDAQ. Russell's up 0.3%. Banks lagging this market's bullishness. Look at this. Financials, the largest bank index out there, is showing a drop of 0.6%, kicking out the legs of the markets, and the markets don't even know it yet. Volatility index does drop by 5%. Gold up 0.9%. And I talked about the dollar being poised to rally. And sure enough, today we had a pop of 0.6%. Hope you had a chance to grab a hold of some of that. But we have the transportation not giving us support of the Dow. So not only did the banks not give support of the overall broad markets, we have the transportation index not giving support of the Dow. A lot of undercurrent weakness that very few people that do not know how to read market internals will be able to see themselves. Because after all, the bears had their opportunity. We came down, we made this lower low, we crashed down, we busted through support, we busted through another area of support, and we tagged 1283, a major support line coming across that we've had drawn for some time, does a touch and go, rallies straight back. The bears had their chance. The bears had their chance. We have turmoil taking place in Libya. We have turmoil taking place in Japan. We have crude oil prices rising. We had a horrible or disappointing report on new home sales this morning. And in the face of all of that, the markets rally back. We had the news for the makings of a major sell-off. The sell-off didn't happen. And so that tells me we have a much better chance now of making a high base formation. Why is this 1300 acting as such a resistance point, and why does the markets keep wanting to get there as of here of late? Because of this weekly chart. The weekly chart, nice rising wedge. We broke down the rising wedge, giving us a bull pullback with this thing. It looks like a hammer. We need to get over 1302. If we can close over 1302 on Thursday or Friday, then at that point we have a monster opportunity to see a nice rally take place. I could see us getting a 1350 really quick on the S&P. Now, if we don't do that, we're in trouble, because if that's the case, we have next week to hopefully do this, but there would be a reversal pattern. Hopefully this next week we could do that, but if we fail to make this 1302 or go higher than that either this week or next, we'll be building a low base formation, or we could just see a sell-off taking place, and that sell-off taking place would drop. However, I think that now, because of this rally back, we have a much better chance of a high base breakout taking place before Friday or going into early next week. And if there is going to be a sell-off, I do see the velocity of that, or the slope of that, not being drastic. I see it staying on top of this purple line and pulling back a little bit, then popping, giving us a higher swing low. All right, those are a lot of opinions that won't make you or me any money, because why? We need to be trading what we see, not what we think. Very important. So try not to put on the bull hat or bear hat and jump the gun. You want to be a bull if the markets are going high, and be a bear if they're dropping low. Take care. Safe trading to each and every one of you. Wish you all the very best in the markets. Till next time, we'll catch you here at Grok Trade.